Testing, testing. My name's Jacob Field. I'm not quite ready to get started. I will wait until 8 o'clock. There are quite a few of you that have already dropped in. Hi, Leanne, Neil, Vinny, Adam, Garnett, Scott. Lots more on the new arrivers there, early arrivers. I'm just asking if you could confirm the audio and visual that is working okay. Within the window, the live webinar window, you should be seeing a red slide, property investment events, and also a chat bar. You are able to use that to talk directly to me. So if you're able to hear and see okay, just let me know in that chat bar as a question. So you can click to toggle to change that to a question or a chat message that you can see and hear me okay. That will be great. Just before I get started as well, there are social sharing buttons. So if you'd like to invite any friends or associates that you might think that might be interested in tonight's content, definitely use the Facebook share and tweet buttons there to let people know. And I'll be getting started in a few minutes. Just another note there, guys. Thank you for just mentioning that you can hear okay. You are able to resize the window to adjust the resolution of the video. If you're seeing things a little bit blurry, you might try just readjusting the window size a little bit smaller and it clears it up a little bit. That might help with blurry windows. I have got the resolution turned up as far as we can go. And then you can potentially turn it down from your side by reducing the window size to clear up the bandwidth. That's just another helpful hint. Good evening, everybody. My name's Jacob Field. I'm founder of ripehouse.com.au, and I'm just bringing you to you an event tonight around Ripehouse, property investment, and how technology can assist us in making successful property investment simple. So I'm going to be talking through some strategies that we can use to firstly find the most upside in markets across Australia, how we can target those markets, and then how we can dissect those markets for success in investing, making sure we're investing in streets and properties that are going to give us the most upside. And I'm going to be also going through, I have gone through Logan in a couple of case studies in recent weeks, but I will be also going through Logan again as a suburb area to focus on for outstanding growth into 2015, into 2016, and dissecting streets there, talking about what I've been seeing in the last week in Logan, and findings that I'm actually assessing on the ground there, and how we can potentially invest there safely going forward. There are a few red flags that I've sort of seen in the last couple of days, which I wouldn't mind talking through. A big warm welcome to everyone over from Real Estate Talk from Kevin Turner. Was featured on his 4BC radio program on the weekend, and we did do a feature in his newsletter. He did cover our webcast this Thursday in his newsletter this week. So all of you that have come over from Kevin, a very nice warm welcome. I do host regular webcasts, so every Thursday 8 p.m. Tune in for regular content. Next week I'm actually going to be changing the format a little bit. I'm going to be bringing on some special guests to help us dissect individual markets on the ground. So, property managers, actual agents, developers, etc., on the ground in the areas that we're looking at and focusing on to help us with our investment and purchasing that for success. So that's coming up next week. I will shout out to everybody tonight, and I'm just going to put a poll on the screen there for you. And take you through the admin of the page. If you can just answer, it's just asking where you are based tonight. I'd love to get a feel for where everyone's tuning in from, and a big shout out to some familiar faces there. I'll start that poll now. So that's going to pop up on the right-hand side of your screen. You can see the property investment events is the slide there in the red. On the right-hand side is a chat bar where you can actually go down to the bottom. You can select a question and you can ping that through to me. And I'll get to that at the end. I will be monitoring all questions throughout the evening and then getting to a large question and answer session at the end. So don't hesitate in getting anything that you are needing answered. Don't hesitate in doing that. Also, if there's any audio visual problems, let me know in the chat feed there, and I will address it. You can adjust the size of the window there to lower down the resolution and make it a little bit crisper. It might take a little bit of pressure off your internet connection if that is the weak point, but I'm getting feedback from a lot of you that yes, audio visual is okay. So I've got lots of people in Sydney, 36%, it's just going down, 35% in Sydney, 10% in Melbourne, 17% of you in Brisbane, where all the action's happening at the moment, a lot of eyeballs on Brisbane, 5% in South Australia, 5% in ACT, and 27% in regional New South Wales, Victoria or Queensland. So all over the nation. I can see a few familiar faces in the list here. How are you, Tony, over in Thailand from memory? A few of other familiar faces overseas as well. So I've also promised a shout out to Scott tonight. Scott did recommend in the last few days a lot of the introduction. I do cover off about 10 minutes of material just to get everyone up to speed with some of the research that we do here at Ripehouse, some of the core knowledge that we can dissect together and then really launch off into what we're looking at tonight. Yeah, Scott suggested having that recorded and provided separately. Just because we are moving to the new format next week, I didn't go ahead and get that done. But how are you, Scott? Yeah, the real bulk of tonight is focusing on technology, how we can potentially really step up our property investment process, our daily process to compete in markets across the nation when there's a lot of eyeballs focusing in on them. So Logan is one where, if we're having this conversation 3 months ago, it was really starting to turn the corner, and there was some really nice dynamic in the market. It was starting to come up on the radar, and Terry Ryder at hotspotting.com.au was one there that had been nominating it throughout the early part of the year. Now there's a lot of focus on the area. You're getting a lot of there are some definite streets to avoid, and I'll dissect those and demonstrate with higher public housing. A little bit of dead spots as around tenancy demand, etc., yields and rent. How can we avoid those? But with the absolute sweet spots left over, the stock might be moving through those. So what is our strategy once that starts occurring? Do we start moving into other suburbs further out, or down through the train line down towards the Gold Coast? Or do we start looking at other key areas through Brisbane, which might be Ipswich or Moreton Bay? So that's going to be some of the questions I'm going to be answering tonight. I am going to be referring back to technology and how that can help us in those decisions. Do pull me up if I am talking a little bit quickly. Do get right into it and really passionate. And there will be a recording and the slides provided after the event, so you will be able to stop and catch up and take notes and anything that you might need. So I'll jump right in. Moving forward, so a little bit about me to start with. My name's Jacob Field once again. I have been investing since I was 19, a little bit over a decade. I own property across Australia at the moment, and I would classify myself as a DIY property investor. So I'm always educating myself and investing in that education to try and move forward in my investment journey. In doing that, I have made mistakes and I've gone in the wrong direction, probably overcompensated in some ways and gone in the other direction. We all make mistakes and that's fine, and I'd really try and learn and empower myself with a network, knowledge and tools to really keep improving and keep moving forward. So that's what that's my focus in investment. I'll probably default into learning something myself before I'll pay someone else, and therefore I know that knowledge and I can take that forward and apply it the next time and the second time and the third time. I founded Ripehouse in 2011, and I'm a DIY property investor. I love working with other investors and helping us together move forward and use property to move us towards our retirement or leverage our incomes, etc. So Ripehouse is a really nice synergy with what I enjoy and what I love doing, and so welcome. Just jumping in, the Ripehouse news desk. We have been talking for a number of weeks around launching our new server, which actually happened on Monday night. There was a little bit of a hiccup coming into Monday morning with the new server switchover, and emails were lost for a few hours. So I do apologise about that, but I'm really happy to say, really proud to say that the new server is running. Everything you'll be seeing tonight is running off that. Obviously, if you're logging in or using the site, that is the new server. We've already seen some performance improvements. We've got another round. We basically were trying to establish a baseline with that new server, and we've got another round of improvements around caching, etc., on that server to really get some extra benefit from it. So you will definitely see further improvements. We were able to release our state-by-state roundtable as a preview of our full Best of the Bunch Q3 report. So each quarter we do an analysis of each state, where that state is sitting in its property clock. We were looking at our data set here. We've got a very rich data set of property data and trying to assess those things, and then we do a comparison of each state and give you the top three. Then in each of those states, we actually do a region by region analysis, which regions are driving the state forward, which are really leading that state and moving it towards the growth, and which potentially are holding it back. And then we'll even jump down to suburbs, streets and properties within those regions that are actually the standout candidates. So as part of that quarterly report, we have actually launched that first state-by-state roundtable. That's on the Ripehouse blog. You can see that via www.ripehouse.com.au/learning. New feature still on the cards. It is getting closer. We have actually got a working prototype happening, and we are testing it, and that's our flood zone. So we've had lots of users, especially those of you who are looking at the Brisbane region, talking and requesting the flood zone functionality. So you will actually visually be able to see on the map where flood zones are located, and also where zoning is located. Visually, you can see where the borders are. Then you can filter properties in and out of those areas. When you're filtering, so implied, if you've got 100 properties in the suburb, 50 of them is sitting in the flood zone, 50 of them out. If you do the filter, switch it on and switch it off, you can see how pricing changes. So you can actually see how the price disparity changes, how the median price changes for property sitting in the flood zone and out of it, and most importantly, you can see how that affects appraised value for those properties. I was featured on Kevin's 4BC property radio show on Sunday morning. There is a recording of that up on the blog as well. He's got an amazing property show every Sunday morning, bright and early, where he has some great guests on, covers a lot of content, and he is based in Brisbane, so generally has a Brisbane focus. And then, as I mentioned, we are moving to a new webcast format next week. On that, so we are tossing up at the moment between analysing Sydney markets, and we have some key property gurus that are operating in the Sydney market to come on and be special guests with that. Sorry, next week's format. And we also are looking obviously at Logan, but we have covered that this week, and also Ipswich, Moreton Bay. Just let me know. I'm just having another poll here, which area you're looking at investing in next. And based on the answers, if there's a very firm consensus, I'll really put bias onto getting us organised into focusing next week on the region that everyone's answering around, having those special guests come on and help us dissect the market. So just an example, within Logan, a lot of investors I've been working with in the last week or so have been using on-the-ground property managers to do third-party rental inspections. That's a formal rental inspection, and they're also assessing the quality of the property. It's a really good tool to use in actually being able to buy property without visiting it, working with a particular buyers, property managers up there who are doing a great job in doing that for investors buying remotely, potentially getting one of those on to help us, telling them what tenants are demanding, what types of property to look out for, which ones to avoid. That on-the-ground information is excellent. Just looking at the numbers, so 64% of you looking at Brisbane, 8% currently looking at Melbourne, 8% Sydney, 12% Adelaide, and 8% regional New South Wales. So definite bias there towards Brisbane. That's just out of you guys who are attending. That sort of does correlate quite closely with what I generally see with users of Ripehouse. But yeah, it's interesting to see. We'll definitely probably look towards the Brisbane region next week, informing the content and bringing on the special guests that I have organised. So just moving forward, so I did just touch on then how potentially flood zones might affect appraised value for property located geographically in or out of the flood zone. Another key element to look at when assessing location and how that location affects appraised value for property are key amenities in the suburb. And I do apologise for our regular listeners. I do cover this often, and I will take that on board, and it will be focused on the special guests from now on with the webcasts and providing that dynamic content each week. But this is a really nice sounding board to get up to the same speed, just because key amenities in a suburb have a dramatic effect on demand for property, and that demand has an effect on appraised values for property. According to our research, so we have a huge data set of the actual geographic locations of all shops, schools and transport across the nation, and also property for sale, for rent and sold listings over the previous 3 years. And we can map the exact locations of all those things and how price is affected by its proximity to key amenities. We did that for shops, schools and transport. We also did it for doctors' surgeries, chemists, parks, hospitals, cafe precincts and restaurants. They did have some patchy correlations, no real firm trend. The absolute big three standout were transport, shopping and schools. And you can see here, you've got a spike here at 12 or 1,100 metres from a closest transport hub as a train station is the sweet spot. Right on the doorstep is okay, but anything after 1,200 metres is dropping off a cliff. Proximity to school, so right on the doorstep where the school bell rings is not necessarily a positive thing at all. It's actually the average expectation for appraised values. 250 metres is the absolute sweet spot. It levels out to about 1,200 metres and then drops off a cliff after that. And anywhere within about 1,200 metres of shopping is reasonably standardised in terms of demand. So we are talking about walking distance to all of these things, but definitely there are sweet spots that exist with each of these things, and they might not be what you might logically assume. Another key element to look at when assessing potential for affecting appraised valuations for property is public housing, social housing in our suburbs across the nation. And talking here, mostly in regards to major capital cities, expect to pay 25% less than the average suburb price for, 25% more than the average suburb price if there's 0% public housing in the street, and 18% less than the suburb average if there's 20%, I'll start that again, and if there's 18% or more public housing in the street, expect to pay almost 20% less than the suburb average. So very dramatic effect that public housing has on our property across the nation in terms of appraised value. Definitely something to look out for, and value a property based on that, and compare it to other properties in similar areas of public housing to assess fair market value. And definitely, you could be put off the scent if you are comparing a property that's not an apple for an apple. Expect volatility. So public housing is something that potentially could hold capital growth back at a street level. And this is what Ripehouse is all about. And this is what I'm helping us to try and understand for any suburb across the nation. How can we assess the dynamics within a suburb at a street level? How can we look at the positive and negative effects at the street level and make sure we're investing in the absolute sweet spot that's going to deliver us the upside that we're looking for, whether that's capital growth or the ability to drive rents and yields forwards with positive cash flow, whatever our primary strategy is. So public housing is one of those things that adds volatility to the mix. You can seek it out, buying really low in an area that may gentrify above and beyond the suburb overall and actually have further upside. It's a very high risk play, or you can avoid it because it may and generally does result in a dead spot as far as capital growth. So the suburb may move forward overall. You may have growth in population and infrastructure spend and affecting 3/4 of the suburb, and 1/4 of it is just a dead pocket there with public housing. And in 5 years' time, 3 years' time, you've got prices haven't moved, rents haven't been able to be indexed with the suburb overall, and your yields have dropped in terms of the suburb. So public housing does add a little bit of risk and volatility to the equation. Just letting you know, and opening our eyes up to that concept. Yeah, so Ripehouse is all about investing in these markets that have the most upside for us personally, for what we're actually trying to achieve. And in doing that, we're looking at across the whole nation and ranking every suburb across the nation in order, and looking at the absolute peak of that list, the top of it. In doing that, though, we might be investing in unfamiliar locations, and to invest in these locations, we have to develop a professional's mindset. How can we compete in these markets against lots of other investors, lots of other buyers, agents, etc., that may be very fast moving? So we need to make sure we have our due diligence process each day very efficient, make sure we're using the right tools, have the right network around us, getting the right advice in a timely fashion, so we can make really clear and concise decisions with surety, and avoid spinning our wheels. This is what I'm sort of talking about, developing this local mindset, looking at the amenities, looking at potential sweet spots in the suburb and knowing the areas to avoid. That's then helping us to assess fair market value and then potentially negotiating underneath it. So it's all about improving our daily process and knowing information is power. In doing that, it's really critical, and I do apologise for those who, this is the standard content I go through each day, in each webcast. So yeah, just to establish that baseline. So only another couple of minutes, I suppose. It's really important, I suppose I just mentioned it on that last slide there, to assess and buy property remotely. We've got to be very confident of the condition of the property. And when we find that condition, we can then go away and we can perform the same condition assessment on comparable properties and determine, yes, it is comparable or not. We can find the absolute clear-cut #1 comparable for that property, and that's going to give us confidence in making a firm offer on the property. So when we are assessing condition, we've got to be very subjective to the market that we're looking at. Mossman versus Mount Druitt is an example for those of you based in Sydney tonight, making sure we're assessing poor condition, average condition, or good condition based on the suburb. In doing that, I'm just putting a property into 3 buckets. So at this point of our due diligence process, we're going from a reasonable number of properties, say 10 or 15 per day. Once we've identified the sweet spots, we can only look into those street areas that have got the most upside, then assess condition on those properties, get them into a group, and I look at poor or average or good condition for a property, which roughly translate to unrenovated, average condition, or renovated off the plan, etc. In doing that, I'm looking at street appeal, I'm looking at kitchen and bathroom, brightness, neutrality of colours, flooring, etc., making sure it's presented very well for sale. Does it have a current tenant who's just got clutter everywhere and compromising the sales process? Has it got any unique features? So Brisbane high set is seen as a positive. So it has air flowing underneath it. It's got extra storage room underneath. High set's definitely something that is preferred in some markets across Australia. Other things like heating down here in Tasmania is obviously preferred, and it is something that is paid for in assessing the value. So just looking at some of the indicators of assessing poor condition, low socioeconomic areas, you're looking for the key signs. Is it boarded up? Does it have no pride in the front presentation at all? No landscaping, no maintenance of the garden, nothing done interior, tenant inside, it's all cluttered, original kitchen, bathroom, etc. And you can see the differences there for average and high socioeconomic. Basically, average condition is no real improvement. Potentially for high socioeconomic areas, yes, it might have a renovated bathroom, kitchen, and even for average as well. But generally, we're seeing very tidy presentation, neutral colours, and the sales campaign hasn't been compromised by clutter and controversial floorings, etc. Nice white, bright kitchens, bathrooms, and good conditions. Obviously, brand new or very high spec in the high socioeconomic areas, but in low socioeconomic areas, good condition. Basically, the best of the bunch in the suburb potentially might have just had floating floorboards put through, just a nice, clean, reasonably modern kitchen, bathroom, nice, tidy street appeal. Doesn't even need to be landscaped as such, just nice and tidy, etc. That moves it into good condition in low socioeconomic areas. So I'm just using these slides as a little bit of an indicator into how to gauge this condition remotely. First step is remotely looking at the images, and in a moment I'll start talking about some strategies to mitigate risk and making sure the condition is accurate and there's no sort of hidden gremlins around, termites or whatever it may be. So yeah. I suppose this all needs to be applied to an area, and in reference to the research, the Q3 reports that we're putting out in the next week or so, I have released the State of the States, which is the first page of that report, just comparing state versus state. New South Wales has obviously had a lot of growth recently. According to our metrics, we track sales volume. We also track days on market, price growth, and the trends for each of those things. And rental volume and rental yield or rental per week amounts and the trends for those things. And that's helping us to establish where each of these states sits on the property cycle. Queensland as an example, sales volume up, rent up, days on market down, definitely moving, and a lot of consistency in the story towards the strong part of the recovery phase. Prices haven't really started moving, but that is deceptive. So if you look at Queensland as an area, as a state overall, 0% growth according to our metrics from Q2. However, that is brought down by some of the regional and coastal areas, which are neutralising the growth that's happening in southeast and Brisbane areas. So look out for the region by region analysis in these states, just to have a little bit of a clearer picture over our top three. We do, in informing these numbers, only look at the key investment grade suburbs across each area, which is, it needs to have a minimum requirement of dwellings and stock turnover to qualify, and also volumes to qualify, just so we've got reliable samples in each suburb and we've got a firm baseline to grab the figures from. So sneak peek, Queensland definitely sitting right up number one, but we've got amazing growth and recovery signals coming out of, so future growth coming out of southeast Queensland and Brisbane from what we're looking at. New South Wales is still having excellent growth, obviously, but it is moving closer and closer to that market peak based on days on market is now really, really low in a lot of key markets. You've got sales volumes which have sort of already stabilised in a lot of markets, and you've got rent stabilising as well in a lot of the key markets. So that's sort of indications that it is coming up towards its peak. Yeah, so that's going to be, we are focusing, I suppose, moving down from, the nation, state, region, suburb, street, property, all the way through. Just a bit of an indicator, there are a lot of eyes, and a lot of you are also investing, looking to invest in Brisbane. Over 60% of you are looking at investing in Brisbane at the moment. That's coming from a variety of sources. We do a lot of work and really recommend the work of Terry Ryder at hotspotting.com.au with his reports. The level of detail and research he goes into is second to none. Yeah, so you're obviously tuning in and listening to Terry in the field. Following the other experts in the field, John Lindemann and Destiny Property, etc. And there is an alignment and focus towards. It's interesting to see the alignment. So whatever the case, and whichever source you've come from towards, a lot of you are looking to Queensland to invest. And based on our research and our looking at Q2 data, it is looking in a very positive scenario for future short-term growth happening in Queensland. I'm just going to jump in now, assuming that we have zoomed in on Queensland and Brisbane and Logan with the absolute peak of the interests across the nation in the Logan LGA. Let's use that as our example tonight. And I suppose this has been on people's radar for now, a good month or three. We are starting to see there are some areas, definite no-go zones. We are only seeing probably 20-25% of each of the key suburbs through Logan, with really nice sweet spots in terms of tenant demand, rent per week and yields, also avoiding public housing, and also being close enough to the key amenities to make it a real sweet spot. Stock is drying up and clearing in those suburbs streets almost on a daily basis. So days on market may have been up to, prices, properties might have been seen on the market becoming stale, and now they're just clearing with a lot of gusto. So when that's happening, and as it is happening now, what is our strategy to move forward? How can we still potentially invest there? So does that mean that we look further down the train line, further out to Bethania, etc., Logan, Lee, Bethania, down over to the M1? Or does it mean that we now start looking at other markets which are recommended from experts or throughout Ripehouse in the Brisbane area, which are Ipswich, Moreton Bay, as secondary markets that allow us to really buy under market in the sweet spots in the suburbs still and negotiate very hard. So we're just going to be sort of talking through that analysis. And in doing this, I will be doing street level analysis. I'll be looking at individual properties in those streets, finding value comparables, assessing market value, and I will be using the Ripehouse suburb level tools, search and map based tools, which I'll jump into now. So just excuse me for a moment. I will be switching over to a map to the Ripehouse website now. Just give that a few seconds to come through, and if it doesn't, just please let me know as something has gone wrong. Okay, so just please confirm that you can see the Ripehouse website there. I have just loaded another poll into your screen there, just asking, so we are, a huge majority of us are based in our Melbourne, Sydney areas, and a lot of you in Brisbane as well. A lot of you, over 60% of you are looking to purchase in Brisbane. It'd be great to just know and get some guidance around which strategy you are actually executing. So when I'm talking capital growth, we are hotspotting. We are looking at the key markets that are going to have above average growth. So really leaving Brisbane for dead potentially as a growth area in itself. Which are the key markets within Brisbane are going to deliver above Brisbane growth? So that's what I'm sort of talking with a capital growth strategy. We are looking across the whole nation and really pinpointing the absolute highest upside. Cash flow is generally positive cash flow, so 7% cash flow, very strong bias on cash flow. Renovate for profit is coming in with a strategy where potentially we are buying in capital growth markets, but we are coming in to do a reno, cosmetic reno, and getting the property up, making our money, extracting that equity out in a few months, potentially having and artificially increasing our yields, and then locking it into a buy hold capital growth strategy. And flipping is more structural renovations. We don't really care about the capital growth or cash flow. We are really focused on renovation for profit, and then definitely selling as soon as possible. So 60% of you looking at capital growth strategy, 26% cash flow, 9% renovate for profit, and 6% flipping strategy. So definite focus towards capital growth. Logan is an area that works really well for outstanding capital growth potential. So there's no guarantees, but if you're looking at all of the indications, we've got lots of population growth focus on the key infrastructure throughout Logan, train line, M1 and Logan motorway. Lots of population growth, lots of employment growth in the area. So great capital growth potentials. It's a low socioeconomic area, so you've also got excellent yields just right off the bat. And we can use Ripehouse to make sure we target the streets that have the higher yield. So Logan works perfectly for a combination of those two. You have got the scope to come into some of the key markets through Logan, the Logan Central, Kingston, etc., and do a bit of a renovation, but the price disparity there is not huge. So it doesn't overly work for a renovate for profit strategy at the moment. You're only spending 10 grand to put on 30. There are some suburbs down into Logan Lee where the price spread is still wider, up to 60, 80K for unrenovated versus renovated. The price point is probably not high enough, and the demographic and the socioeconomic climate in these suburbs to justify a full renovate for profit strategy. But you can definitely make some profit, get your 3 times multiplier on renovation if you're doing, a $5,000-$10,000 renovation, floorboard, white paint, brighten up, maybe reface kitchen, bathroom, that type of reno is not going to overcapitalise. You're going to get some of the positives for a renovate for profit in the Logan area. But flipping is probably not going to work. To be honest, you don't have the margins, you don't have the price disparity, and potentially the price point is too low to override the buying and selling costs. One thing, and a lot of you on the line are potentially looking at subdivision, and I haven't got that as an option on there, sorry, in block splitting, etc. You do see this in lower socioeconomic areas. Purchase price in a lot of these Logan suburbs is 300,000 median. On that you're basically getting the block size for free. At this point, low socioeconomic area, you're not actually really paying much more in a lot of cases for block sizes that are going to allow the split in the future. When you see that growth happening, 3-5 year period, you're going to see, if all goes to plan, numbers up towards 450 or 400 or whatever it may be. Now you're starting to see people needing to live in the area because of employment and the services that the area provides. They want to live there, and they start compromising on block sizes just to get into the market. And that's when it becomes viable for that splitting. So it's always wise, and it's always an added bonus to get a block that is large enough to split in the future. I bought in northern Newcastle and the Hunter region 6 years ago at low price points, and it's now just becoming viable from that organic growth in that period to start splitting blocks, where I am splitting one now in Raymond Terrace into 3, which is only now just becoming viable to do. So, that's what I'm talking in a few years' time, that starts becoming an option if you have given that as a backup plan to do. Moving on. So I've just jumped right in here to the Ripehouse My Suburbs list. This is a daily shortcut suburb shortcut shortlist. The suburbs that we are focusing on, we can have here, we can analyse, jump in and view them. In this case, I'm going to be jumping into Kingston. Excuse me, I've just tried to click on the actual webcast software and not the web page. I'm jumping in here to Kingston. Thanks, David, for confirming you can see things. A couple of you, so Leanne, very blurry. Just try and resize the window there, and it might clear things up a little bit. A little bit smaller might improve the resolution. A couple of you have got patchy logging in, logging out. There will be a recording coming through as well, which has a far higher resolution because it is recorded. And definitely bring those questions through. So a couple of you have already come through with some questions. So anytime coming through, definitely let me know with anything you'd like me to cover at the end. I will have a dedicated question and answer session then. I have loaded up Kingston. So, I do refer back to industry experts. And as I say, I really respect the work that Terry does at hotspotting.com.au. Logan is an area that he's talked about in conversations with me. We hosted a webcast recently where we did focus on the Logan area. One of his key drivers for growth in this area is the train line. So not trying to get too ahead of ourselves or too sophisticated, just keeping it simple, just focusing on the suburbs either side or within those train lines, all the way through. Potentially also looking out for secondary factors like Woodridge as an example, even though here in the north of Logan Central, even though very close to the train line, has very high public housing, very low socioeconomic, even compared to the council area overall. Lots of dead patches, very difficult to find. There are some, and I have worked recently with some Ripehouse users who have purchased there. for great success, and there are some sweet spots in that suburb, some really nice key streets there, and some individual properties that are going to have great capital growth potential and yields. I'm just talking more at a higher level. Logan Central around that train line. Kingston, another one around the train station. Going down into Logan Lee as another one down on the train station. I just wanted to quickly demonstrate, because Kingston, this Ripehouse tool here is the map-based tool. It's all about becoming local area experts in these suburbs. So we can see each of the red icons on the map here are current on-market properties for sale. It's all about getting all the properties off the map that we don't want to focus on. There was a pop-up at the start there where I loaded the page that said that 3-bedroom houses are most common and in demand at the moment. When we're investing in remotely, we've got to focus on the key commoditized types of property in that suburb. That's where the demand is for. Let's not get too complicated. Let's not be left with a white elephant that can't be rented or has sort of dead capital growth. Let's focus on 3-bedroom houses in Kingston, and all through here, that is actually the same. So 3-bedroom houses are most in demand all through this train line. In that mix, I do include 3 and 4-bedroom houses. We don't want to be ruling out 4-bedroom houses if it's priced at a similar point, which it generally is in these low socioeconomic areas. In all my searches, I'll do 3 or 4 bedrooms through tonight. So red icons properties, we've got the white outline there for the suburb overall. This is where the magic happens. So these toggles on the left-hand side, you probably haven't seen this type of information before. It is unique to Ripehouse, and we spend a lot of time actually gathering and owning and processing and applying this data to property. So you can see exactly where public housing is located in every street across Australia. We divide the suburb up into 200 dwelling blocks. You can see those highlighted there, and you can click on any of those blocks and it will pull down the actual information for that street area. So in this particular street, we have 12% public housing in Kingston overall. This particular street pocket has 45% public housing, which is very high. You're going to see a dramatic effect on street appeal, quality of properties, quality of tenancies in that street, and it potentially has got a higher chance of being a major dead spot in terms of capital growth going forward. So, quickly you can see visually where things are located. You can see exactly where renters rent and owner-occupiers own in the green there, renters in the yellow. You can see where houses are located or units. You can see where the highest sold prices generally occur. You can see where higher rent is in the darker the purple, higher incomes, high yields. So we can actually target the highest yielding streets in the suburb. So incidentally, that public housing street there has some of the highest yields in the suburb overall, but it's probably very volatile, very low purchase price, very flat capital growth. And you potentially, even though you are achieving high yields, potentially have huge and very long vacancies between tenants, with boarded up windows, etc. So that's a little bit of a caveat. You can see 6.7%, which is very high yield overall in the suburb anyway. You can actually target these yellow areas down here, which have low public housing, but also 8.7% yield. So you can actually get the most benefit. So when we're coming into these suburbs, we're actually trying to target with our capital growth or cash flow strategy the streets that are going to give us, one, the minimum level of yield that we're requiring to execute our strategy, keep the bank manager happy, etc., but also the streets that are going to give us the mix of all those things to give us the absolute sweet spot to deliver that growth. There's lots more toggles, lots more information, but I wanted to come and demonstrate the custom toggle here, and there's a lot more fiddling that we can do here to really zoom down and have a pinpoint sort of focus on the key streets. Each of the horizontal areas here relate to a key metric: public housing, occupancy type, property type, rent, income and yield. That's on a per street basis. We can see that there's 27 areas in the suburb overall, another 200 dwelling areas, and we can adjust these tolerances for certain things. So the maximum level of public housing in the street is 45%. In low socioeconomic areas, I would invest in streets with more than 15% public housing. Obviously, premium suburbs, we can lower that down and have a tighter restriction, but 15% is going to weed out those streets that have that low street appeal in this type of suburb. This is something I'm happy to talk and have bounce back and forth with you individually. Any questions, I'm always more than happy to talk about. Definitely jump in now and talk to me about different types of public housing, etc., and I'll stick around at the end. We can actually load default recommendations for strategies. It's usually a very conservative measure, and we can change those based on our strategy. So you can select a flipping strategy, and it will identify the streets in the suburb that are most likely for flipping or cash flow. In this case, I'm going to own that process and do it manually. I'm going to select 15% maximum public housing in my street. I like to invest in the real meat of the suburb. I like to invest where there's at least 30% tenants and also no more than 70% tenants. So that's a real sweet spot in the middle where you have enough tenants to drive the tenancy growth, rental growth, yield growth, but you also have enough owner-occupiers in the street that's going to take pride in their property, improve it, and increase the street appeal overall of the street, and also that's going to drag up your property. So that's that nice meat in the middle of the bell curve. 30% through to 70% is the sweet spot in these type of suburbs for levels of tenants. We've got 88% houses in the suburbs, so I definitely want to avoid the streets that have a predominant or majority of units. And in this case, where houses are most in common, I'll set my tolerance for 30% maximum level of units in the street. These don't need to be exact. I'm just doing this quickly just to illustrate. I like to target the median rent or above in a suburb. Incomes, I'm usually not too sensitive in these low socioeconomic areas, but I'm definitely targeting median yield or above. So let's set our sights on 7% yield or above in the suburb. We won't worry about the streets that don't yield very much. I've got our tolerances here, and you can see it's all fallen through the net vertically down through here. We've got our tolerances for each metric aligned, and all the way through, we've got 5 areas down here currently selected that have passed the test of each one of those metrics. We can save that, and we can load that next time we load the suburb automatically. If we apply that, though, we're actually going to have orange areas highlighted on the map. Now, these are the absolute sweet spots based on the logic and the assumptions that I've just made that are going to present us with areas that are going to potentially have the most upside for capital growth and potentially outperform the suburb overall. Now, we can actually now filter properties that are on the market. We can view all the listing history for every property on the market. We go out and aggregate that data across the internet and bring it together for you. So whenever it's on the internet, it comes into us like Google would. We track that data. We're tracking days on market data. We're tracking any time that the listing is discounted and providing that information through to you. So you can actually order all properties on the market via price, days on market, or discounting amount. And now we can do some really interesting filtering. So now we've got those orange areas on the map. We can actually filter properties that are located in those areas and only in those areas. And I only want to look at 3 or 4 bedroom houses. So that's going to go away. It's going to find only the key houses in those streets. This is where our focus should be on. We've come back with 11 properties. The quartile pricing for those properties is 289 through to 375. Potentially there's one here at 550, and I do know this suburb quite well. This is actually a very large block. That's going to throw things out a little bit. So we can actually take that out of the mix as something that sort of might dilute things for us. But you can see how I've got a lot of properties down to a few. And now Kingston, I will sort of talk, there are only 11 properties that have passed muster here. A lot of these properties, there's potentially something that has gone wrong with the sales campaign. They have become stale, and a lot of these properties are clearing quite quickly at the moment. So we're sort of asking ourselves, there's Logan Central, there's Kingston, and there's also Logan Lee that have a lot of similarities in the type of suburb. They are close to the transport, have the same sort of level of public housing, and they do have some real sweet spots in the street level analysis. So definitely apply the same tolerances. The real sweet spots where tenants demanding and paying higher rent and yields potentially means that demand is going to start translating to excellent growth. Look for those sweet spots in the suburb, avoid the public housing, and there is a short list of about 23 or 4 bedroom properties on the market at the moment in Logan Lee, Logan Central and Kingston in these key areas. So try those tolerances across the suburbs. As I say, well-positioned stock in these suburbs is starting to clear with a lot of regularity. So if we follow the train line down through the Logan local government area, the next stop we come to is Bethania. Then we've got Eden's Landing, and then we've also coming right down into Benlee. So what I'm sort of talking about now is applying the same principles and concepts, focusing that train line down, and start applying that sweet spot analysis to the next stops along. We can actually navigate around suburbs really quickly. We've got the neighbourhood comparison button here, so you can view the closest 10 suburbs to your suburb in question. It will give you all the key metrics for it, and you can actually pick out price depression areas or higher yielding suburbs very quickly in this way. So you can see here Woodridge is a lot lower in price, higher yield as a really quick example. You can click the click to search button here. So we have a very robust suburb search engine within Ripehouse. We go across the whole nation and we'll present to you in order suburbs in your catchment area that potentially have the highest capital growth upside, highest relevance or upside for flipping, and also for cash flow. You can view that and search for. But in this case, I'm actually just going to type in the address, the suburb name. And I'm just going to really quickly demonstrate to you how we just zoom in on the key streets within Bethania, and I'll do a really quick illustration of how we can assess fair market value for properties on the market. So in the same way, I'm going to assess the same tolerances. You can actually zoom out, view all the suburbs in the area. You can view the darker the yellow here, in this case, the higher the capital growth, the cash flow fundamentals are for the suburbs. So you can pinpoint suburbs that have the most upside for your strategy very quickly, and then you can jump in and view those as well. And this blue toggle here will actually show the darker the blue, the higher the capital growth fundamentals are for the suburb based on our algorithms. And the higher the green areas here, the green areas are predominantly preferred for flipping, executing a flipping strategy in these suburb areas. So that's a lot of more information. You've got a lot of metrics you can track. You've a lot of suburb and property level reporting that you can print off. But in this case, I'm just going to place on the same tolerances. Load those up once again. What have I actually saved there? I think I've actually, yep. So I've loaded up my saved tolerances. I'm just actually now relating that back to the suburb just because rents are slightly different here. So I've got my nice baseline and I'm just readjusting that just to make sure we're not missing out any sweet spots. And then I'm going to apply that. So now in this suburb, we've actually got 4 areas that have passed muster. I really like to see it when they are concentrated around each other. So people are living, demanding and paying more, and potentially got the same capital growth drivers in the same areas within the suburb and are bordering each other. So I really like to see that, which is happening now in Bethania. So now we're seeing a lot of focus, a lot of investor attention on the Kingston, Logan City, Logan Lee area. Now let's, if it will have any difficulty finding properties well valued in the sweet spots in those suburbs, let's potentially keep using that logic through the train line into Bethania. And we've got 4 street areas where we can now apply the same filter to and see the cream of the crop in the suburb very quickly is the process. If we're still having trouble, stock is starting to clear through Bethania, etc., we can make the choice. Do we continue down the train line, or is it time to start moving into Ipswich or say Moreton Bay as an example, as 2 other alternative areas? Because as suburbs move towards a seller's market, you know, you've got boom time conditions, you're going to start seeing options coming in, you're going to start seeing a lot more competition for each individual property. You're going to start paying more than asking price. Days on markets are going to be dropping or very low, and yeah, it's going to be difficult conditions to purchase property and assess market condition very reliably. You're going to see the price disparity and price spread tighten up. So you might not be able to make as much money through that cosmetic reno, etc. So now we're starting to ask ourselves, are we going to persist and invest in this area, or are we going to move on to the next hotspot? So that's the question we're answering. And let's do this quickly. So we're coming through Logan Central into Kingston, Logan Lee. We are moving on that train line. The really good stock is drying up. Is Bethania the next answer, or are we going to start moving into Ipswich or Moreton Bay as the secondary and third options? In this case, we've got 4 properties on the market here in these key areas. Price spread is pretty close. I'll just pick one here. There's no discounting on any of these properties. They are what they are. This property here at 17 King Arthur Boulevard, I'm basically going to be trying to put this into the 3 buckets: poor, average or good condition. First thing, very tidy street appeal, very well presented for sale, nice neutral colours, excellent show furniture, obviously got floating floorboards. This has probably been renovated for sale, or if not even flipped. Yeah, reasonably dated bathroom, but it's very tidy. I think that might be a modern vanity, but the shower enclosure is a little bit dated. But you know, you really can't fault this for the suburb. Oh, excuse me. I've just actually misclicked and gone backwards. You couldn't actually fault that for the suburb, to be honest. It's presented very well. It's definitely in good condition. What we've got to make sure of, if we are looking at a property that we don't want to renovate, I'm not going to be able to. Didn't actually grab the street address for that. Where are we there? I'll just try and find it on the list quickly. 6 Glastonbury. Excuse me, it's the other one there on Glastonbury. Where are we? Sorry about this. Yep, so this is the one here. I slided left with my cursor and that changed, hit the back button on the browser. Yeah, so if we're putting this property into 3 buckets, we're putting this into the good bucket and making sure that each comparable that comes back is going to be also in good condition. So we're comparing this property. It may pay a little bit extra for it. It's not going to work for us for a renovation strategy, obviously. If we're not doing that and we want to just buy for the numbers, for the growth and for the yield, this might suit us very well. We've got to make sure our comparables are in a similar condition. And doing that, I'm assessing this is in good condition. The algorithm, we have an algorithm within Ripehouse that actually looks at the sentiment used by the agent and compares that to other properties in the same suburb. It looks for keywords, and obviously all selling descriptions are positive, but it looks for the positive in the positive, and it looks and compares those descriptions to other keywords and sentiment used by the agents. In this case, it's got it right. I agree with it. If you disagree with the automated algorithm, you can override that, but it generally gets it pretty close. And it's also going to average it out. So it's going to, all it's doing is it's going to go away and get comparables that the algorithm thinks are going to be closer to the same condition as this property, and it's going to put them in order. So it's sort of saving you time in vetting those comparables, making sure they are reliable. You can see the full listing history, suburb level metrics, so average for sale price and trend, rent, sold price. You can see that there's been $6,000 growth in the last quarter alone. You can see days on market, volume trends, vacancies and yields. You can see the area level metrics at the street level and compare it back to the suburb. And you can see all the valid comparables. So it's going away now. It's looking at comparables that have sold within the last 6 months, giving them absolute priority, ranking them in order of other properties in a similar condition. Obviously, same bedroom, same house, distance away. And it's going to give you back the top 6 comparables. I do definitely recommend taking the time to own this process. If you find a comparable on there that might be at a higher price point and you disagree and you think it's actually superior, I guarantee that it's probably going to be pretty likely that the selling agent is going to be using that to artificially increase the asking price and demand for that property. You've got to call him out or her on that and say, no, that's not a valid comparable. I disagree. This is my list of comparables. This is my estimated asking price, and that is your way of negotiating. So you pick the low side, they pick the high side, and potentially you get it closer to your starting point. So owning this process, you can the engine will give you back comparables that it recommends. Any comparable you disagree with as inferior or a better standard of property, you can actually remove and bring in the next 7th comparable. You can view all the images for these comparables, perform the condition assessment on them, and then obviously remove it if you disagree. So we own that process. We own that process because we can use it in our negotiation. We take the top 6 comparables that we've formed for rent and sold properties to form a market appraisal of 280 for this property. There are a number of adjustments that are applied to the property based on its location, which relates back to those graphs that I did demonstrate earlier on, and public housing. In this case, I probably would disregard them just because it is a low socioeconomic area. Everyone has a car. If they're working, if they're not working, they might not have a car, and they're not going to be as sensitive to transport and shops, to commute, etc. Low socioeconomic areas that have low density of housing, you're not usually as sensitive to these things. But you can see the whole end-to-end process. We've got ourselves right down to a sweet spot analysis for all of those regular users and current investors working with Ripehouse to invest in Logan. Start to think about when the stock's drying up in the key streets, the train line down through to Bethania, even down into Eden's Landing and beyond. And then if that's still not sort of ticking our boxes, looking at secondary areas like Ipswich and Moreton Bay is the potential strategy. So I'm just going to switch back over now. Excuse me in doing this. I won't be a moment. I'm going to switch back over to our slides. I hope you have found that beneficial. It is the tip of the iceberg on that page. Do let me know when you can see the slides coming back onto us again. Yeah, just because there's a lot to go through with that page. We can see all for rent properties, all sold properties visually on the map. We can do some really amazing filters just to look at and save those filters to save us time every day. Becoming local area experts for those key suburbs and just flipping back into them on a daily basis and seeing the on-market activity. So it's using that tool and the Ripehouse tools to improve our daily process, to avoid spinning our wheels and start competing in these markets and making firm decisions that are going to help us compete against other buyers, agent and professional investors. So taking you through in a summary of that whole process, becoming a local area expert, finding the sweet spots in those streets and working out how that sweet spot positively affects or negatively affects value and how can we assess that accurately. Then once we've found individual properties in those streets, how can we assess condition and make that condition assessment relative to the suburb. Find valid comparables that are both timely, similar condition and location. Are there any location-based adjustments that we might need to apply? And what is fair market value? And then how can we use local area information, public housing, etc.? Has the property been discounted? Are there signs of distress? Invalid comparables to negotiate and position our property purchase under market. So we've been having some really good results lately with some Ripehouse users through Logan. I won't shout out names. There's a few of you online here. There was one caveat and with one property using third-party property inspections. I always recommend this. It's an insurance policy. If you've got a third-party property inspection, you've got a property manager potentially looking at getting your business in the area. If they're doing a third market inspection, they're probably going to call out some issues that are going to stop the property being rented for what it potentially could. And that can be factored into your decision to actually make the offer or then get in building and pests, etc., or further due diligence, and then potentially negotiate that asking price or sign contract price downwards based on that condition that you have in that contract. So yeah, that's all about the process of mitigating risk when you're buying remotely. I do talk about that in the Buyer's Guide to Property Investment and the Know Your Purchase Strategy ebooks. Check those out at ripehouse.com.au/learning. Jump into the blog. There is an email box down in the bottom right-hand corner that you can get those three along with the Q3 report. So definitely check those out. But it's all becoming that local area expert and acting with clarity and conviction when we make these decisions on a daily basis. Just talking a little bit about the Ripehouse community. So we do have a real focus on research and helping and supporting other DIY property investors. So it's helping each other using case studies and these special webcasts and private information around processing that and applying it very effectively on a day-to-day basis and avoiding spinning our wheels, using tools and accessing these tools within Ripehouse to help us with that due diligence process. Some of the information and tools and a way that we try and improve your sophistication and success as an investor, and trying to do that simply second to none. So it's making sure you're empowering yourself with those tools. And then the third component, which I haven't touched on, are our property partner groups. So it's joining you up with other investors looking at Brisbane or looking at rural New South Wales or wherever you are looking, joining you up together, potentially joining forces, sharing information and really empowering each other to deliver and to really achieve with our property investment goals. So in doing that, our property partner groups basically are private chat areas where we can ask questions together, we can answer questions together, we can talk about what we're trying to achieve and motivate each other to do that. We can be accountable to each other. We can support and advise. We can process the new learning within Ripehouse, and we can really motivate each other to think bigger and dream. So they do work really great for doing that. It is part of the Ripehouse community. Just letting you know, Guy has recently purchased. He actually purchased in one of the great streets within Woodridge recently. He was very happy with how we helped him use the tools and dissect and supported him in using the tools to make that purchase. A couple of really nice feedback there in the middle from Donna and Cassandra, and Andrew there on the right actually purchased a higher yielding property in Cairns. Yeah, I'm always, feel free, if you've got any feedback, I'd love to hear from you. If you have got issues you're having or suggestions you want to improve the software or something you might not understanding, I'm always open and have make my time and phone available. So I love hearing feedback about the software and improving it consistently and regularly. So the flood zone is something that a lot of you have been asking for, and zoning information is something that you've been asking for. How can we get that out, roll that out effectively? So I'm always ears. Please get in touch with any feedback that you have. Moving on, so Ripehouse is a subscription service. The Discover, all the learning, the tools, and the property partner groups as part of our annual subscription of $997, all inclusive. Just to thank you, and as a thank you out to our special guests from Real Estate Talk and those who tuned in on the weekend, and to all of our regular users and viewers, thank you for coming tonight. And as a special thank you, I'd love to offer you a $200 discount on that price. For the next hour only, bring it down to $797 for the next year access. You can actually lock that in right now based on the right-hand side of your screen here. I'm just switching that on so you can jump right in and view that offer on the right-hand side of the page. scroll right down to the bottom of that offer and you can see a big orange subscribe to Ripehouse button, which is going to lock in that special offer for you for the next hour. Within that, and as part of that offer, I'm opening my time up with you one-on-one. So via Skype, email, phone, whatever it takes, let's get ourselves really motivated and organised to target the absolute sweet spots across the nation. Streets, properties, let's get a short list of properties together. Let's go back and forth with agents. Let's negotiate really hard on them, bounce ideas off each other, and really nail the next purchase you have with Ripehouse. So as part of that annual subscription, I open my time up to you exclusively, as much as it takes to do that, and really hit the mark with our next purchase. So that's available in the next hour only when you subscribe. You're also able to lock in if you don't use the tool on the side there. I will be sending an email out to all of you with that offer. So do look out for that, but you can also lock it in via www.ripehouse.com.au/discount. That will be available on that site as well. And as I mentioned, just scroll down the page there a little bit to find the Join Ripehouse button, but it also will be sent to your inbox as well. I have touched on the work that Terry does with his reports, and it is a way to really drill down quickly onto the key regions. He has some great information in these reports about the growth drivers within Logan. Why is this occurring and how can we leverage it? It's a great sort of starting point to get to focus on the areas. Ripehouse kicks in and I can work with you, and the tools will really work with you to execute and get the most upside from these areas. So as part of the 1 hour special, I'd love to offer you a free report from Terry, valued at $77. Work with me, find the areas, which report you would actually like to execute. A lot of you are obviously in the Brisbane area. The top 5 Brisbane report is excellent source of information to dissect Brisbane. So that is included in this 1 hour special for you. And included in any of our memberships, you have live integrated chat support on the page. So any quick questions, get through to our customer service there. I'll provide my email and phone for support. It is secured by PayPal. So they hold your billing information and process the details. So it's very secure, and you will be redirected through to PayPal when you do click on the subscribe to Ripehouse button. And then they bring you back into Ripehouse with your account is already created. Look out for a welcome email, which has all of your account details, and it also has a link there which has an assessment form where I ask you a couple of quick questions, and you can book in my time using an online booking form that suits you. So yeah, that's sort of the process going into PayPal and then back out. Yeah, so jump in with that, but I'd love to move on now to some individual questions from you. So I'll pop the pause button for a few moments as the questions come through. Don't hesitate in asking what you're seeing. Are you seeing anything on the ground? Are you having problems purchasing remotely? Whatever it is, I'm opening the table up, whether it's questions about Logan, Brisbane, other areas in Brisbane, what's happening in the Sydney market and how potentially Ripehouse and other investors are still purchasing there for success. You did notice in the Q3, basically South Australia would have been the number 2 suburb in Q2, in our Q2 report, if it wasn't for days on market still increasing. So, you know, days on market decreasing is a very strong sign of growth within the market, or future growth, which is probably more important than past growth, or obviously it is. There was a very conflicting story coming out of South Australia with those rising days on market last quarter. That has now stabilised, a very consistent story coming out of South Australia. It's now just hit on the radar, and it's very firmly placed from our research in that recovery phase of the cycle. All of the key metrics are aligning down there. Potentially our eyes, can be drawn towards South Australia now as a viable candidate. This Salisbury area in the northern part of that has sort of been on a lot of people's lips for a few years, had a few false starts, still got excellent yields. Maybe chatting and talking about that area further might be on the list. I'll pop it on pause there. I'll take a few minutes to get some questions through, and I'll come back to you in a moment. Okay, there is a question here from Kathy around the public housing data and how that potentially should sort of inform our decision. Public housing, yeah, where did I pick the number from 15%, which is directly what the question relates to? Basically bringing that back at a higher level, and I am aware of time here, so I sort of will cover this pretty quickly, and you can come at me afterwards with emails for any questions. Just around public housing, so 15%, we've sort of got to come to a compromise, so we can't be ruling out too much of the suburb with the tolerance that we have. So, if we're adjusting and we only have a 5% tolerance and it's obviously ruled out the whole suburb, then we have to ask ourselves, is this suburb right for us, to our tolerance to crime or to socio-economic factors? And yeah, is it opening us up to enough opportunity in the suburb? 15% for these low socio-economic areas generally gets us, 75% of the suburb. It's taking away that 25% of the suburb that has that high public housing. And at 15% public housing, you're not really seeing a huge negative effect on street appeal and vacancy rates and quality of tenancies, etc. Obviously, there's always exceptions, and this is an average, and you might struggle in some regional or rural areas to do that and avoid that level of public housing while still having nice strong tenancy demand. And obviously then also in the more premium suburbs in our capital cities, we have to be a lot more conservative, so avoiding 5%, 10% public housing. But it does come back to the suburb overall. Are we ruling too much of the suburb out because of our restriction? And if we have to open our restriction out too far, are we still comfortable with that? So it does bring it back to you as well. Another question here about the for rent data and the yield data and some of the so we go away and obviously in our aggregation tracking for rent, for sale, for and sold listings across the country, and we're doing that in real time. So we're always updating our metrics, our volumes, days on market, yields, vacancy rates, and that's our point of truth. And then we go through regularly and apply that to a street level and help you view that visually. Sometimes we can't do that at a street level, so that's why we have that filter around number of dwellings in the suburb. So 1,250 is our buffer. Any suburbs with less than 1,250 we've found not usually a reliable sample in doing the street level analysis. It's not generally an investor class suburb or an investment grade suburb just because the volumes and that density is a little bit too low to get reliable numbers. And when we're doing this hotspotting, we're doing this unfamiliar or remote investing, it's all about the numbers. We've got to be sure of them. That's our point of truth. So that's how we do that at Ripehouse in those numbers. So I'll hold it there. Pop through any questions you have via email. Once again, I really thank you for your time and spending it with me. You can lock in that special offer on the right-hand side of your screen there. Click on the subscribe to Ripehouse button. You will be receiving that through via email as well. And you can go to that www.ripehouse.com.au/discount. Look out tomorrow. I'll be sending through a link to the recording. And you can, once again, rinse, repeat with that. I can open myself up to any questions while you're watching the recording as well. But yeah, I'd just like to say and reiterate, thank you so much for attending. I hope you found the content beneficial. And until next week, definitely tune in, and I'm looking forward to having the new format with some extra presenters on board for that. So thank you.